presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, we weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to pick up the steam for the end of the day here. I hope you all have been having a fantastic week. Obviously, a little bit of a turnaround right now. This Friday, we are going to have live trading with Larry Pesavento. Again, you go to TFNN.com, go to the services tab. And you see it right there. Live trading Fridays with Larry Pesavento. He does this 2 times a month. It is from 9 to noon Eastern time. Let's say you're not in it right now, you want to subscribe. Well, you get to go to that one, and then you get to go to the first one in April as well. I can't believe it is almost April. That is terrifying. You can also check it out on the front page right there. While you're at it, check out the Tiger's Den Trading Room, $1 a year. We do that just so we can keep everyone safe and we know who is in there. Let's take a look at what we got going on. Well, your SPY is off 1.39% at 567.51. You have the composite off about 2.33%. Dow Jones Industrial off about 0.58%. Russell Futures off about 1.38%. The dollar is ticking a little bit higher. You have rates going back up, okay? 10-year trading off about 0.16%. What's the news, right? I mean, essentially, Trump is going to add tariffs on auto imports. Oh man, that's going to be at 4 o'clock. So we'll see what comes with that. You have a big paper coming out speaking about the potential for a massive amount of overspending on data centers. Of course, you had Alibaba's CEO say yesterday that he didn't understand why Americans are spending so much on it. We kind of went into that a little bit during the whole DeepSeek fiasco and why, you can't run the newest stuff or push cutting edge with things like DeepSeek, but we also don't need to be spending as much as we are running older models or current models. And again, with the Alibaba CEO, who knows what his personal interests are or reasons for saying that kind of stuff. So, you take all these things with a grain of salt. We have Apple off 1.11%. Bank of America off 1.13%. Citibank. Let's see what else we got. Google off nearly 3%. You're just off. I think data center stocks getting hit the hardest. I'm glad I took a little bit off Nebius here. You're off 10.56% today, so at 24.30. That is right along this kind of line of resistance here, and it is cracking down. So hopefully we can get a close above that. If not, there's still probably some movement to go down. Of course, they are burning a lot of cash, but they're not leveraged, which is great. So they have room to do that if they need to. They can either take on debt or they can just, kind of dilute the stock, kind of wait to see what happens with that. They are the only only company out in Europe doing it at this scale. Of course, they're expanding into the U.S. as well, but with this kind of news coming out, it puts a lot of this stuff in risk. And again, I find it interesting, with this kind of paper coming out, I find it hard to believe that companies like Meta and like Microsoft would be kind of out of the loop on that. Of course, they know what DeepSeek did. They know what diluted models are. They know what DeepSeek used. And what that paper really was about the inability, or kind of like diminishing returns, I guess, with the performance of AI related to, an increase in data center capacity, right? And so I think again, I'm sure these, what we're calling hyperscalers are aware of that kind of stuff. And, I think what they're trying to kind of get into is one, it's like, we don't create this processing power necessarily to make the AI better, but to kind of service the demand we're expecting with it. So, is this an overreaction? I think it's still a little bit too early to see. Of course, you're going to continue to get gains in efficiency in AI, but it seems like, and again, I think this market does have somewhat of a fear of illiquidity, which is why I was a little bit, on top of other things, definitely business specific, a little bit sensitive with Tesla, especially running up as much as it is. It seems like, inflation is not going to come down to 2% until 2027. So you're going to get these relatively elevated interest rates, or at least Fed fund rates. You have Besant coming out and trying to suggest different ways you can make buying the 10-year more appealing for larger banks and entities. And, we'll talk about all of this. Long story short, I still think there's a lot of uncertainty, and the market is, of course, extremely sensitive to any kind of new development that has to do with tariffs, that has to do that questions the amount of money that we've been spending over the past year and a half. And Nebius off 10.56%. Little bit fortunate that I took some off yesterday. I'm still in the position with a decent amount of shares. I'm right, around where I purchased at, so not really off too much in any capacity. But this is one I think we're going to have to keep track of. Especially if you get downgrades in CoreWeave, that's a massive problem. Again, I think in a way their exposure in Europe, which was kind of seen as maybe not as attractive because all the energy was in the U.S., it might end up being something that can help float this equity. So we'll see what happens. Of course, cash burn business, but they have a lot of room to leverage if they need to, or dilute. Let's take a look what else we got going on. Palantir off 5.82%, trading at 90. And the SPX, of course, we went over that. So, okay. Let's talk a little bit, of course, with the auto tariffs coming out. It's going to be at 4 p.m. Trump on Monday had hinted at the auto tariffs could arrive prior to April 2nd. Said we'll be announcing that fairly soon over the next few days. Probably then April 2nd comes. That'll be reciprocal tariffs. He's calling it Liberation Day. But here's the thing. He said, maybe we'll push it out. It's just the problem is that uncertainty exists. And I think this is a big overreaction because what we've seen with gold is it's almost like that is being used as kind of like a hedge for the uncertainty, right? Not necessarily a hedge for inflation because we haven't seen that, at least, you hadn't, because equities have been moving up so greatly, comparatively speaking. But when the uncertainty strikes the market with the tariffs and Trump starts talking, you really did see a nice march up in gold. And that's kind of like the general operating thesis we've been looking at. And even that's off today, which this might be somewhat of a market overreaction to some of this news. Folks, stay right there. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. Taking a look at your USAT. Man, up 41% today. European leaders are still pushing for this defense build out. You know, I would also say, in light of that Atlantic kind of leak of the group chat of our government officials, it's quite clear that this current cabinet is not, I mean, it's been clear for a while, right? But thinks Europe should kind of help themselves a little bit more. So what J.D. Vance was saying, I don't know if these numbers are correct, but, you know, we're trying to bomb the Houthis to restore the trade routes. And J.D. Vance says, well, you know, that's only 3% of our trade goes through there, while Europe's goes through 40% of Europe's goes through there. Now, that's a little bit convoluted, I think, because how many of those European goods flowing through that channel end up, you know, getting into American products in the day? I don't know. But the point being is that it's very clear that this cabinet wants, and this government wants, the Europeans become more in charge of their destiny as far as defense is concerned. Take a look, you know, Rheinmetall's up maybe about 1.9%. Eutelsat blowing up 41.26% today. Of course, you have that high of 260. And again, these guys are, it might be cool to do a deep dive on Eutelsat quite a bit. I'm not used to doing, you know, fundamental analysis on Euro companies, so we'll see what kind of challenge that is. It'll be kind of interesting. Let's take a look at how the Chinese are doing, because I've not looked today. Baba off a little bit. Let's take a look at BYD. Okay, that's, but I want to see the ADR. There we go. 0.89% today. Yeah, so not too much to look. Wow, just Eutelsat. Probably people thought that was a major sell-off, and so they bought at that area. And again, we'll take a closer look at that sometime this week, hopefully. Gold contract off 0.13%. Oh, and along these levels, I mean, again, like these miners getting like ripped out, right? I mean, Goro's getting gored today. You're up 8% earlier in the day, and now you're off almost 8%, right? You know, a 60% swing is massive overall. Quite a big movement in Goro. Of course, is one we've been talking about with Tim Ord. And again, I would argue, again, not much really changed for this fundamentally today for it to sell off. You know, you've had, of course, some very nice movement to the upside, a nice little pullback with that resistance around that 45 level area. We're pulling back. Could probably see this going back to 50 cents, but again, I do believe probably a little bit in the gold contract. This thing is just, and in the miners as well. These things are just a little bit not overbought, but there's been a lot of buying. And so some digestive phase kind of makes sense for them as well. let's talk a little bit about Tesla, okay? Because this is getting weird with the equity. Now, you're off 6.43% today. You're developing some pretty decent volume. This could, again, just kind of being a trace back. This equity is so volatile, right? This morning and a little bit last night, I was working on a DCF for it. So you talk about that. We'll take a look at some other ratios, mainly to enterprise value. I think the thing going for Tesla that I can give to the bulls is that their cash to debt ratio is very solid. I just argue that it is just, you know, I've done DCFs on this in like the far past and everything, and it's just always kind of been above, right? And so a lot of this equity price is really just like growth speculation, which is why when we talk about it, you know, especially something like this, you know, I'm not going into all these exact ratios because it's not trading based on those, right? Of course, you have Waymo going into Washington, D.C. You can even see that headline right below there. But regardless, I want to do it. And again, I think a positive thing for them is that cash to debt ratio. They have tons of cash and keep running it out. You know, you're talking about some of the sales numbers that they had. And so this is what's going to be weird, right? Because there's definitely a large potential for some of these sales to be declining. And the problem is we need more data, right? So there's a chance for these sales to be declining in January, February, because we're waiting for the refurbished Model Y, right? Like people aren't buying leftover stock of Model Y Legacy to get the new one. That's fine. Of course, you're probably going to get a lot of sales at the end of this month because of the launch of the new Model Y, right? And that's going to have to be normalized out, and we'll see what really happens with Tesla, you know, throughout this year. Of course, they have deliveries April 2nd, I believe, and then earnings at the end of April as well. So we really will see kind of what the sentiment is on Tesla. Have people actually really stopped buying this? How are they doing? You know, obviously, I mean, the growth wasn't that large revenue-wise. Like, let me see if I can. I'll just pull it up. And again, I want to do this more in depth and show you guys tomorrow. But I mean, I could just even pull up my spreadsheet here. If I can find it. Dun, dun, dun. I mean, yeah, you know, you're getting like revenue growth from 2023 actual to 2024 of like 0.95%. EBIT increased 7.94%. You know, I mean, okay, that's fine. The company is growing, but again, like like I said, we'll go through the whole thing tomorrow, but this is pricing in such massive growth. And that's just my argument with it. My argument is that it's priced in massive growth for a long time. I think there's fear of this economy correcting. I think tariffs put people scared. It takes money out of the environment. A lot of this money, definitely from the lows, which is basically retail. And I mean, you can see just the massive hype, right? The bearish sentiment got very strong, and we buy back up. But again, I would just argue this run-up was really predicated on nothing but Trump winning. You know? So anyways, we'll see what happens with that. Now, what I will say that is a positive for Tesla, obviously you have some expansion into India. You have expansion into Saudi Arabia. I'm sure that will probably do very well for them, and that is, of course, great. They're showing Optimus, which I'm still extraordinarily skeptical of. Again, I don't think they have that first mover advantage. I'm not sure Optimus is necessarily leaps and bounds better of other things that exist out there. And then, of course, you have driverless as well coming, but it's just like it's not like brand new anymore. Like there are other people competing in this area, and they're going to get better as well. And this is kind of an issue like first movers can really have. Of course, you have the advantage, but the disadvantage is, hey, people catch up and they figure out ways to kind of do what you're doing, maybe cheaper, or at least in a way that kind of can appeal to your consumer base. You know, they are showing the Optimus at the White House. You know, is fine. Of course, you have Commerce Secretary say, hey, buy this thing. This is the cheapest it's ever been. Which is probably a nice movement to the upside for it. But again, I think a lot of this, you know, The only thing I think that's positive for Tesla in a major way is that they have that cash to debt ratio of like 4.45. So even in like, high capital cost environment, Tesla can keep spending, and they're launching a new Model Y. I don't think it's going to like plummet sales or nobody's going to touch a Tesla. I'm sure this is stirring some interest, and you've seen in Norway as well that a lot of people are buying that. That is a good indication for the trend of purchase. Like Norway is one of the first to report, and if someone is liking it there, if the Norwegians are liking it, a lot of other people are going to start buying as well. But I think things are a little bit different than they have in the past, so we'll wait to see. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Try and play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. Take a look at GameStop right now. They had earnings, and they're up 11.91%. So, very interesting. Let's kind of dig into this and see what they have going on. I'll pull this over here. So, okay, here's your balance sheet here. And then the cash flow is just wild as well. Okay, so look at this increase in current assets, right? That is massive. You're at $4.7 billion versus $921 million the year prior. Honestly, at this level, I mean, this total asset total liability ratio is awesome for them, right? And this is all in cash, which is very interesting. And then we go down to the statement of operations. Look at this. I mean, your net sales, okay, contracting. This net income has exploded, right? So the question is, like, what is that from, right? Like, is this a turnaround for GameStop? Do things, get better? Can we actually start buying, right? As you can see, this big bump up that they had was really from the interest income, right? And that floated them quite a bit. So let's take a look. If we go to interest income, yeah, so it increased 113.9 million to 163.4 million in 2024, compared with that 49.5 million we saw. The increase is primarily attributable to an increase in cash and cash equivalents resulting from the issuance and sales of our shares of Class A common stock under the ATM transaction, as well as higher interest rates in the current year compared to the prior year. What are they going to do with the cash, right? Because that seems super appealing that they have so much cash now. And they're decreasing their SGA. Let's get back to it. But their net sales are still contracting. So what are they going to do with the money? Well, what it sounds like they're going to do with the money is buy Bitcoin. Now, it's not disclosed by them at all how much they will buy, but they're going to do it, which I think is, again, just another kind, and I'm not like a hater on Bitcoin at all. In fact, I've been bullish on the concept recently. I'm definitely not saying buy Bitcoin right now, but it just seems like it's kind of like a little bit of a game. Their net sales are going down. They've been steadily contracting, and this is one of the larger contractions when you look over it from 2022. What improves for them in a meaningful way? Like, could this be, kind of like a value trap in a way? And then again, their major competitors, their whole industry was ripped out from under them, right? These sales of physical copies of games. That can just be done in just any big box stores. Obviously, you can buy them on Amazon. And a lot of times, the way it's done now is you just buy the digital copy online. And you download it straight from your computer. You have that on Steam. You have it on the Windows Store. So I don't really see the long-term appeal in this. And again, the cash is awesome. They get this cash from selling the common stock, like, okay, and then how are you going to flip it to make that meaningful, right? And I just don't think they do. I think Bitcoin is still obviously extraordinarily risky. Maybe on the long term it's fine, but I haven't seen a plan that they have in place to make me be like, you know what? Yeah, this movement to the upside, this is legit. Now, the net income up is fantastic, but that's probably not going to be the case. How many more instances like that are you going to get where your interest income is that high, right? Or does it go back more in line with how it usually is? And I would argue that's probably the latter, because it was just a one-time. They could do it all as much as they want, but it gets to a point where you're just, diluting everything. So I don't know, kind of interesting. Definitely did not anticipate that net income at all. So that's pretty cool for them. They are obviously extraordinarily well positioned to spend on things they want to spend. Definitely long-term debt is relatively low. You're at like, what, 6.6 million for that versus 4.7 billion in cash, right? So that's really attractive, but it's just, what do they do? Where do they go? Because their main thing just doesn't really, and they could keep cutting stores and doing all this, and it would, float their earnings by reducing kind of, cost of goods or SGA or whatever. we wouldn't reduce cost of goods, but you get what I'm saying. They would just spend less on operations and they cut the stores. But I just, I think what the actual trend is here, as opposed to this kind of one-off nice increase in interest and then this amazing, movement with cash as well, is that their net sales are contracting. And that's because they're kind of an antiquated business model. So, if you think you want puts in it or whatever it is, because can this actually sustain these levels? And to me, it's just hype, because buying Bitcoin isn't really a business plan. And companies, especially these small little pump and dumps that were going on in December, that was a major way they were floating themselves, like Cooler, for instance, right? KULR. That was a big thing, and it gave them a nice rally to the upside, and that just comes back down because, again, it's just not a business plan. And I guess the thing that GME has going for it right now, at least if they're going to buy Bitcoin, is that it is lower than what it's been trading at, right? And it's been holding steady around that low 80s area. So, if liquidity improves in the market, definitely, obviously, you get your equities that pump first, but then Bitcoin. But if the market is bad for equities and people treat Bitcoin like a equity supplement, right? Like when that's already overbought, we just go into Bitcoin. Where does the increase in that investment come from? I don't know. Just kind of weird. Even looking back, at this. Your net income, geez. Even for, 2023 is 6.7 million. You had a massive loss in 2022 of 313 million. Which looks like from a major operating loss. I don't have 2022 up to really look at this, just looking at the 2024 10K. And their interest income, was a lot lower in 2022. So, the interest income has been increasing, but I just don't see that being a common thing because of the source of it, right? So I don't know. Interesting change. Net income's great, a lot of cash, but what do they do with it, I think it's still kind of a weird investment. Folks, Sarah, we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. Jacob Shoup watching the Tom O'Brien Show. It's kind of a GameStop for me. I don't know if I want to take any position to that because obviously it's kind of like irrational. I think really with that movement to the upside, there's still the meme hype around it. I guess if you just absolutely gotta buy a put on it or something like that, you can see at least, on a yearly, a pretty strong floor for it has been around that $20 level. Definitely not recommending or dissuading it or whatever it might be, but that's kind of what you got to see. And man, even that, this thing just rallies, man. I mean, obviously there's like short squeezes, right? So, but you can see the bag holders get kind of stuck at that $20 level. And I would argue that people buying GameStop up at these levels are maybe not like doing it for the right reasons, if you could even buy it up at these levels for the right reasons. So, they kind of just stick in a hole and they're like, hey, don't worry, this will go back up. Anyways, pretty strong support right there on the yearly for 2024. All right, let's take a look. SPY, we're down today. This is on some pretty light volume. I think a lot of the sell-off is coming from, honestly, things like the NASDAQ. NVIDIA is off today. You have that off about 5.86%, and that's on some okay volume, relatively speaking. This might be at least a lot in the SPY. Again, that's what I mean. I think this is kind of like a slight de-risking or a little bit of a reaction. Give me 1 second. Slight reaction to what Trump's talking about with the tariffs. But, does this reverse tomorrow? I mean, it is on substantially light volume. It really depends on what Trump says at 4 p.m., right? Which I will be listening to pretty closely. ELO, you're looking at Rocket Lab, my man. Off 3.13%. With stuff like this where it's very... this was a lot of speculation for it. It's trading at $8.9 billion. They've had some pretty good revenue growth, if I remember correctly, right? Let's see here. I mean, ELO, why not think about like Eutelsat, man? Because you got a lot of competitors in the U.S. with the rockets. You got Lunar, you have obviously RKLB, ASTS, SpaceX. What about Eutelsat? I mean, this is not me saying, hey, buy, especially because you're rallying up 41.8%. And I said earlier in the show, like, I do need to look more into the company and kind of what its prospects are. But the hypothesis is interesting, right? That they're going to, obviously the Europeans need to build out a similar kind of LEO network. And it seems like Eutelsat's the one who's getting that kind of traction, We'll take a closer look. Back to 1111 on Rocket Lab. I mean, I think they reported like decent earnings. Yeah, they're off a little bit of EPS. Yeah, I mean, you had a nice little bounce back there. Back to that massive gap up from Trump. Yeah, I mean, it held well, comparatively speaking, on that. A lot of these stocks, I mean, you look at Tesla, even NVIDIA, like, traverse back to that Trump bump, right? Gave it all back and have been floating around there. So, I mean, that's held a little bit. I mean, the same thing we've been looking at with Palantir, right? I mean, this was more on earnings. This was the Trump bump for them. They didn't get anywhere close to it. I still think this is overvalued for sure. But, when you get the sentiment, what can you do with it? Anyways, it's kind of what I'm looking at. Are you like Rocket Lab, Elo? I know a lot of people are getting into that kind of stuff. What's a Lunar? Lunar's off 5.39% after a nice movement to the upside. They had a good revenue report on earnings. But again, I think a lot of this was just too much and too quick for, this really kind of nascent. I mean, this is legit rocket science people are getting into, So, I don't know, interesting kind of stuff with it. I've tried to stay away from investing or just at least trading these kind of companies because, I think a lot of it is hype-based. Now, things like Intuitive Machines are actually doing things like Rocket Lab. I mean, they're actually doing things like the neutron rockets and everything. And it is very interesting, and I think it is going to be important. But I don't necessarily, as like an analyst, have a frame of reference, or some guy analyzing equity, have a frame of reference for rocket companies, So we'll see what happens. I would assume a lot of that is just contract for putting the satellites up in space, right? Anyways, it's kind of what we're looking at. Some other equities that I think are a little bit interesting, but again, I think this whole report, and this is the report as well, and just DM me right now or email me right now because I get busy right after the show looking at emails and all that kind of stuff. Associated for the Advancement of Artificial Intelligence. Some big names, at least in the research of artificial intelligence, were interviewed in this. I think a lot of this response is coming from something similar or something like this. This was released on 3/7/25, but even with things like DeepSeek, that had been around for a month or two before everyone kind of caught on to it. So, if you want this, ask me. But so, the stock I'm looking at is Credo. This has had a massive sell-off, valued at $7.5 billion, insane PE, right? But they're doing a lot of the connects. Like they have optical connects, they have connects for telecom access networks, and that was something we've been very interested in. So the optical solutions, they have it's called a PAM4 digital signal processor, enable optical interconnect for cloud scale data centers, massive AI build-outs, 5G infrastructure, enterprise data center upgrades. So it's very appealing, but the problem is the whole data center play. And again, I mean, this is a pretty intense PE for these guys. Let's see what they had. Yeah, so they're valued at $7.5 billion right now, at least according to Thinkorswim. In their last 10K, I had total revenues of $59 million. They had a net loss of $9.54 million, which is improving. Again, I haven't done like the quick ratios and all of this, and I don't want you guys to sit here and wait while I'm typing everything into a spreadsheet. We'll talk more about it. But, if you have some time tonight, kind of look into it. It's very interesting. Okay. So in their most recent 10K, they had total revenue of $72 million. That's for 3 months. And that's year over year, of course. In the 6 months, they had $131 million. Gross profit, let's look at net loss of like $4.2 million, which is a lot better than what they were doing in the same period the year prior. I think it is very interesting trying to get in to some of these interconnect things. I would also argue as well with the telecom build out that we're doing in light of things like Salt Typhoon. You can get American companies like this become a lot more valuable, right? The whole thing is we put a bunch of Huawei stuff on our telecom network, and then we have a very patchwork telecom network as well, because we're one of the first ones to build one out in the world, and then we kept, innovating on it, or kept reiterating upon it, and it creates this weird little patchwork that's very insecure. Of course, they also, instead of just, optical, they also have, traditional, like copper communication and stuff like that. But the problem is, I just think, unfortunately, right now, because of these reports and some other stuff in the news, especially with Alibaba's CEO's comment that the data center play is a little bit in a free fall right now for the near term. So folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. Excuse me. Looking at ARK again. Arc Quantum Incorporated. This I believe is just vastly overpriced. What's easy with some of these quantum stocks is kind of understanding, one is, are they actually in quantum computing? And then just kind of looking at how the revenue behaves. It's really as simple as that, especially when you're talking about quantum, which should be growth. So a lot of it's revenue increase base as opposed to just profit and all this other kind of stuff. You're off 5.43% today. This thing, we were talking about, they're saying they're doing this post-quantum encryption, or rather quantum resistant. I mean, all it is just you can spin symmetric keys whenever you want. That is not necessarily a massive moat in any capacity. They say that they're NIST compliant, but I haven't seen on NIST yet, and I did try looking a little bit of where they say, or they recommend rather, that you make symmetric keys because they're more resistant to cryptographic attacks. Additionally, I'm looking at it, their 2023 revenue was 5.6 million. Okay, you're trading at 216 million right now, again, according to Thinkorswim. And then I looked at their 2024 revenue, 293,000. what the heck is going on with this? I think they're riding the quantum hype, when in reality, all they're really doing is creating software as a service that can wrap, your other softwares and then generate a symmetric key in order to use them. I don't know. I don't think they're competitive. They're out of the UK. I don't think this is necessarily the way that's going to kind of go. It's an interesting idea for sure, but it's definitely not super novel in any way. I think a lot of this, again, is branding, right? Arc it quantum. We're not really doing anything quantum. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien.